Alrighty, welcome back, traders. May is in the books, and so of course this video is going to be the May trading recap. Some thoughts on this month. It is, my new biggest best month of 32,000. I don't have any expectations going into each month. It will be better, will be worse. I kind of just trade, and for the last 3 or 4 months, each month has been continually getting better. So I think that probably is me just continually growing upon myself and as all the experiences I've had as a trader, but also in this market, it just keeps getting more and more insane. So I do want to go over kind of how I think this month came about, and it the probably the first factor was that there were a lot of OTC plays. If you've been following me for a while now, you probably know the majority of my beating career was I was a predominantly short selling OTC trader. So when OTCs were hot and before I was good at listed trading, it's NASDAQ trading, I traded OTCs probably like 70% of the time and then listed NASDAQ for like 30% of the time. But almost all my P&L was from OTCs. The 30% I traded NASDAQs was not very profitable. I maybe made a couple $100 here and there. So I was predominantly OTC. Then when OTC slowed down, I had to get better at learning NASDAQ. So for the past year to 6 months, I really got a hang of trading NASDAQs, from December through April. It was all NASDAQ trading. The market was going nuts as usual, like I've said. And so I got really good at NASDAQ trading. And so now NASDAQ had become 70%, OTC had become 30%. They flipped, right? OTC had now become the minority at 30%, and NASDAQ trading became my main source of profits, with 70% of my trades coming from there. This month, though, I actually looked at my stats. It's 50-50, right? 50% of my trades came from OTC, and 50% of my trades came from NASDAQ. So it just shows there were a lot of great opportunities on both sides. And for me, kind of liking OTCs better and being more aggressive on those allowed me to really step it up and have both best of both worlds in both exchanges. Really allowed me to really set myself up for this kind of a month. So I also looked at some of my best trades, like what, and I suggest all you do this too. Like look at your best and worst trades and find out how can you do more of what's been working really, really well, and how can you reduce what's been terrible for you, right? And what I found was I had 13 trades over $1,000 in profit. Okay, not at 1,000. It could have been 2,000, 3,000, 4,000, and regardless, any trade over 1,000 I counted. So I have 13 of those. All those 13 trades added up equaled $30,500, and my month is 32. So you pretty much can say my 13 biggest trades was essentially my entire month, right? And so you may have heard this before, and if you haven't, this is a really good lesson. There's only 4 outcomes in which a trade should end, right? It should be a small loss, it should be break even, it should be a small win, or it should be a big win. And usually, at least for me, what I've been finding, and specifically from this stat on this month, your small wins, small losses, and break even trades will all pretty much cancel out, right? You're not gonna have a windfall of profits from those three. It's the big wins that are really where your money is made. So I have too many trades to go over this month. I have like over 70 trades, which is the most I've ever taken. So of course I can't go through them all. So I tried to pick what were the best and worst trades of this month, and trying to kind of help you guys see what I see, in that the biggest winners is what really makes my account go forward. So we're gonna get into those. Let's get right into it. First one was BYZN. So this is his first play of the month. I believe this was the first Monday of the month I traded this. It was an OTC, right? So right out of the gate, right when May started, we have an OTC opportunity. This was a former promotion, and even then, here this was probably a promotional move. I did not find any emails or any compensation on a letter, but once a promotion, I kind of have to assume the worst, that it probably is again. And so this ran from 7 cents up to 40 cents in a matter of 3 days. Now, into this huge spike, I did take a $2,500 starter, and I believe about like 40 cents here. Now, where was I risking? I was going to risk this little high here at 45. Once it made this key lower high here, it's when I entered. And so when it pulled like this, I was like, okay, great. Like I'm probably going to be right. Now I'm looking to add. Now, it did uptrend into the close, so I wasn't going to be aggressive. I'm not just going to add, just to add. I want to see where can I add in a meaningful spot? So when it spikes the next day into the pre-market high or the previous highs, I'm thinking, okay, do I have to cut this? Right? Is it going to break over and I can just reshort higher for a better opportunity? Of course, it double tops. So at that point, I see, okay, it's double top now. Now this is a clear, even better risk level. Now I know this 45 is actually meaningful, even more meaningful than it was yesterday. So now that's still going to be my risk. Now I'm looking for the spot to add. I did unfortunately get a little bit eager and shorted right into here, thinking it was going to go red because the red move was, I believe, 33, 34, and it was tapping that level. So I shorted, I added more, and it didn't break. So now I know, okay, I'm still not going to change my plan. I might take a loss bigger than I wanted to, but that's still my risk level, right? I'm not going to change my risk level just because I added in a spot that didn't work. So I stayed patient for a couple hours. Finally, we then break that low. This is where I add most of my size. This is where I believe I added at least half, if not more, of my size, because now I know this should be it, right? This is done, showing me everything I need to see prior to what needs to work for me in this trade, and now it's happening. So now my risk level is going to be 40 cents right here, and clearly you can see this stock just dumped. There was no effort, there was no struggle. Whoever was long or whoever wanted to get rid of their shares, they threw them all out the window into the stock, panicked super hard. Now I didn't cover any here, and most times you probably should. Now, why didn't I? Partly because I wanted to be aggressive, knowing that this was a prior promotion. I just had a very good, strong feeling about this from prior experience. If you're being a trader, you're not going to know this, so it just takes time and practice. But for me, seeing this stock in the past and seeing how it moved when it did have its promotion, 2 or 3 years ago, however long ago it was, gave me some conviction that I need to probably be a little more aggressive and hold a little longer for this. I was fully willing to swing overnight if I had to do it, but it actually kept breaking down. And then this level right here, this little top right here is actually 15, which seemed like probably a decent level to cover. And when we got to that low, it actually started supporting. Selling kind of stopped. If you're watching level 2, and so I said, okay, I've pretty much taken almost all the move from today. I don't need to be any more greedy, and so I covered 15 cents for about $3,400. So that was a solid way to start my month, and ultimately kind of foreshadowed what the rest was yet to come. So next play. This was actually my worst loss of the month on, I believe, this day, on Tuesday of the first week. It was this $1,200 loss on MVIS. Now, MVIS ran from 20 cents up to over $1.50. So at that point, my strategy, I'm looking for the backside. I'm looking for longs bailing because this is just overdone. Now, I believe I actually have my trades here. So yeah, MVIS is right here. So if you look at this daily, or this intraday, we had this pull out the open. Okay, and so when we fail to spike twice, when we have a double top here in the 170s and we pull, I can't help but think I need to get short. I can't. Sometimes you just have to trust your plan and be like, this is what I see time and time again, and I just have to trust it because you don't know this is going to happen, or you don't know that this is going to come back and break high day. You have to trust your indicators as you see them when they come and react to them, and so that's what I did. I started shorting all these bounces. I did have, fortunately, chase weakness, which was terrible in hindsight, but I'm trying to be aggressive. I'm trying to just get in, which is a little bit too much of FOMO going on, right? And then we bounce. And at this point, I now know I've entered because of FOMO. I now know I have too big of a size because I'm just chasing weakness. So that's why you see these covers here, because I'm just thinking to myself, I don't have a good trade plan. I'm emotional. I'm not thinking straight. And so ultimately, I then cut the rest of it at the high day break, and I just kind of chill back. I'm like, you know what? Clearly, I'm not seeing something clearly. Let's just give it a break and let's come back and reset and see what happens. So I give it some time, and then we get weaker, right? We go back under VWAP. We try to spike again. We fail again. And then we were trying to break down these two prior lows and support levels. So at this point, I'm thinking now again, I'm like, the indicators are telling me what I need to be doing. And I keep telling myself, I have to get short, right? I can't be worried about taking another loss. I have to, everything is showing to me that this stock is going to die and I need to get in. So I do that. I start getting short in this bounce, short into this kind of bounce failure, and then we keep supporting. And I think right around here is when a bunch of bigger bids started coming in, and I'm thinking, no, not again. I just do not want to be caught in this situation. And so I said, just get me out, and I cover. And so I'm thinking I'm all smart, right? I avoided this squeeze. I avoided this next squeeze. And then you just see the complete destruction of this stock late day, and I miss it, right? You don't see any entries. I'm flat after this candle, so to see this just dump, it's probably a better screen here. To see it just absolutely just lose itself, and I completely miss it. It just sucks. It sucked, but again, because FOMO, resulted in these losses here, ultimately led to me kind of removing my FOMO, which was the right thing to do, but it ultimately led me too scared to even enter again, which is why I missed this. And you actually see in the chart here, I tried to reshort and I immediately covered because this entire trade all day long was just so emotional. I just could not get myself together to just find this trade plan and just stick to it no matter what. I just thought I could read the tape better than I really could in this stock. The volume was massive. I think it traded over 50 or 100 million shares. So just everything about it was just very crowded and very hard to read. So ultimately, I just covered right away, and I just missed this pull again, and I just kind of threw in the towel. I was like, you know what? Clearly, I can't read this stock. I am just gonna let it go, let it pass. We'll reset for tomorrow, and that's what I did. So coming into tomorrow, we had this morning spark pre-market. Now, it clearly failed in the 150s, which is where this huge support and resistance level is from the prior day. And we come out the open and we just dump, right? And what's different from this one versus this one? Well, first of all, now it's already proven it can't get over the 150 level from pre-market, right? There's pretty decent volume here, so it couldn't get over there. It failed, and out the morning, it couldn't even retest that and just dumps. Versus here, where there's really no prior level, right? Anyone who's long doesn't feel scared about any resistance above them, right? They think it might even go higher, which it kind of did. It did, it definitely broke out late day, or definitely broke out to new high day after it had its pull in the morning. But here, and after this pull here, there's now so many longs underwater. So the tide is kind of shifted, and this is where I believe I have my trades on this one too. Right, and so this is where I started in on pre-market, only because I saw how well it failed here, and how the 150s and 160s was really great resistance. And then so once we failed again, like I said, I have to just trust the indicators. I have to just go with it and react to what happens. So, and that's what I did, and we dump, right? We're going red in the day. Now this is the first red day, so now I feel very confident, much more confident than I was the day prior. Gave it some patience, let it break some new low days, and ultimately I just started realizing I'm probably being too greedy, or I'm probably overstaying. And so I did end up covering into like these dips. I did reshort a little bit and covered again, but that was that. I ended up making about $1,100 back from the $1,200 loss on this day. So ultimately ended up losing $100 between the two plays. This is a perfect example of how my loser was bigger than my winner. So ultimately on this play, just kind of good lessons and something to take away from, I just can't be aggressive and emotional when the stock is too choppy and hard to read. But finally, once the clear backside is in, that's when you should be sizing up. That's when you can feel most convicted. And then you can, hopefully make a bigger profit than you did a loss. So that was pretty much for week one, the best trades. Week two, we have NMHLY. This thing is just another great OTC opportunity. It ran from 20 cents up to 75 cents, so about 200% winner in a matter of days. The top day was a great kind of blow off top move where it consolidated all day. And if this is actually a really good swizzle, you could have bought this like 59, 60 breakout and then sold into 70 and 75. That'd been really cool. I did not take that long, but that would have been really such a great play. And so coming into the next day, I'm looking for the first red to green move, right? This day it held green, this day it held green. And so I'm just looking for when is it going to finally break down? And so we actually are gapping down. The red green level was 75 and we're opening up at 70. And so at this point, it's almost, NASDAQs usually always do the overextended gap down play. Very rarely will it happen on OTCs, but this was an example. And the reason why they usually don't happen on OTCs is because if they gap down, they usually panic right away. There's no morning spike to get short into, like you see on Nasdaq. It's just a dump. And so I knew that going into this. We get her open. We actually get lucky with this one green candle that holds it up just enough for me to get the size I want, and risking now 75. And like you see, after that minute ends, we just pull really hard, very similar to BYZN. Someone who was long wanted out ASAP. And so I immediately covered into this pull because, when you get a pull from 70 cents to under 50 in a matter of 5 minutes, that's a massive percent gain. So I did cover right away. Did not reshort this bounce. I actually, again, this this is where I'm not looking for a trade and a trade is coming to me. I didn't short this bounce, even though it was going to be a good winner. And I thought, okay, I'm going to miss this play. I made my money. I made 2 grand shorting this panic. I'll be done. Then we come midday and we are spiking again. And I'm thinking, this stock is just another gift. It's just an ATM of money. It's just giving me another gift to short into a midday bounce. And so that's what I do. I start scaling in, I believe, a little early at 58. But then once we get into 60 here in this volume ramp, I start getting short, risking now on 70. We get short the level 2 turns, massive, you see this volume. It's a clearly big stuff move into 65. It pulls. Now I know I've probably likely this bounce is over. I then short into this bounce. It keeps fading. It continues to work. And I realize, if this closes at its lows, I want to hold overnight. Because considering how well these panics do in the morning, this is likely going to happen again. And so that's exactly what happened. Right into the close, we actually panicked even more. So I thought this is the best close I could possibly ask for. I hold overnight. Coming into the morning, I got a little bit greedy. I did think it was going to go to like 35, maybe 30, considering how hard this panic was the day prior. But as you can see here, it only panicked just below 40 to like 38 and then bounced. And so at that point, I'm thinking, okay, this stock is stronger than I thought. This stock is not panicking like I thought. And so ultimately, I did give some profits back and covered into this bounce instead of being quick and reactive and covering into what was a fake or a weak break below 40. And then as you can see an hour later, it actually does go to levels that I thought at 35. So missed a few $100s there, but I'm not going to complain. Making 2 grand here and then another 1,500 here over this overnight hold. Just another great OTC opportunity. And so that's that. Next play is another NASDAQ. So this was BTIQ. There's a lot of, I don't know, rumors, but just people are comparing this to Tesla because they have an acquisition going on. But anyway, none of that matters to me as a technical analysis trader. All I see is that this thing's gone from $13 to 35. And at some point, longs are going to sell. Some point, profits are going to be being taken. And so I was looking for that. Now, each day, this stock, again, like NMHLY, this stock never went red on the day. So the very moment I see any action that's going to take this stock red, I want to be short. And that's what we saw here. On this day here, we see, these huge spikes, this huge, squeezes, like thinking it looks weak, squeeze, thinking it looks weak, squeeze. And so I'm looking for when is it going to look weak and stay weak? And that's what we see right here. We get this pull. You think it would ramp back. It doesn't. Another pull, another bounce. You think it's going to ramp, and it doesn't again. So at this point, this is where I'm entering. I believe I actually have my entries as well. Let's look here. Right. So actually, yeah. So I think I remember seeing this here. Yeah. I remember seeing this bounce and like, this is where I should be entering. Was still scared, but then we panic again. I'm like, okay. I again, like I said before with MVIS, I see so many indicators. I have to get short, right? And you actually see here, I took I believe a small loss or a break-even trade here, thinking this was going to happen. Again, it squeezes, so I'm staying away. But anyway, back to here, I start shorting. Now, shorting right here and having all this upside of where you could have shorted, some people would call this a chase, and it kind of is. I'm not going to deny that at all. And so when this pulled here, this was a massive pull. And you see these candles here, these candles were not nearly big enough covers as they should have been. I think I covered at best maybe a quarter of my size. I honestly should have covered half or even all of it. Because when it bounces, I add this size back, and all of a sudden, this bounce is way stronger than I thought, and we rip, right? And so all these higher highs, all these little new highs on the bounce I could have cut, and for whatever reason, I decided to cut the exact top. Right, you see this candle? That is like you guys can see, it's the exact top of the bounce. This stock got me. This stock got me emotional. This stock got me to rethink my entire game plan going in, and so essentially, what was up a well over 3 grand profit turned into over a 2 grand loss at this cover point. So just super frustrating, right? And my ultimate risk was 235 right here. So if this broke this level, if it went any higher, I would absolutely have to cut that, no questions asked. Because I was risking more on this play. Don't think that because I took this loss here that it was just me being overly aggressive or that I wasn't following my trade plan. Like I had a trade plan. I just was risking much, much more. And ultimately I wanted to cover early, which was dumb, right? If I had risked this level, I would have never had to cover and it would have worked. but I did. I covered right at the top, and right when I covered, I knew I made the mistake. I knew I broke my plan. I did not stick to my risk, and so that's why I reshorted. I did actually making some profit back, and then ultimately led the day being down $700 on this ticker. But I think this is just a good example of not only being greedy, right? When you get such a huge pull like this and you don't take off like all of it, it's easy for me to say in hindsight, but just learning this lesson from the stock, I just can't believe that this stock panicked all the way down to 25, and I just didn't take anything, you know. And then to think that a big huge pull from 35 to 25 wasn't going to lead to a bounce back to 31, 32. It was just greedy of me, just very greedy. And then to see you know so many good trades work out, like if every red candle is higher than the green candle. Like ignore the morning, but all here, everything looks great. But this one candle, and that one candle resulted in the loss for the day. So not only is greed one lesson, but just how meticulous and attention to detail and just margin of error, how small the margin of error is for trading. Right, you make one wrong cover. You don't follow your trade plan for 1 second, like I did here, and decided to cover. Your entire chance of profit pretty much vanishes. So that was very frustrating. But again, a lot of lessons from that. The greed got the best of me, being emotional and covering before my trade plan got the best of me. So that was probably the biggest lesson I took away probably this entire month. That trade was very, very important. So next is GNUS. This stock is a royal pain in the ass because they've had probably over 5 offerings now, and and each offering just doesn't take the stock down. The stock continues to go up even after their offerings, and so going from 70 cents now to up over 150 in a day, I'm looking for the short. I did take a dumb loss here because it was gapping down. So again, I had to try to just trust the indicator, take a short, but literally right out the open, it just rips. I lost about $700 covering, luckily at like 132 and avoiding this a massive squeeze because that would have been a terrible, terrible loss. Again, because it broke my risk, I got to follow my trade plan. I'm out. Next day, this was really good. Again, this is very similar to MVIS, where you see all this resistance here at like 170, right? You clearly see the tops here at 170, you clearly see the bottoms at 170. So at this point, 170 is kind of like that line in the sand. There's this line where a bunch of sellers and buyers are going to clog up this channel of price action. And so you want to see, is it going to fail there or is it going to get over it? And so you see here, morning spike, right into 70, tops out quickly. And I think if you look at the volume. I've made this comparison over multiple videos, but what kept me very convicted was this volume, right? This volume is going to squeeze you out because it's so big. They're trading over almost 1 million shares a minute. Here, it can barely trade 500,000 shares a minute. Okay, so that should be a huge bearish sign, which it was. And I believe I also have my trades here because I can never remember them, so I take pictures of all my trades. So yeah, you see here a small star pre-market. I actually cut it out the open because I want to see, okay, does 170 hold? You could argue, why don't I just risk 170? But for whatever reason, I wanted to play it safe. I didn't want to get squeezed like I did last in the morning. But then we see 170 hold, and by this point, when it goes back red, that's when I start noticing the volume, like I just mentioned to you guys. So that's when I get short. I'm like, yeah, this thing's done. This thing's weak. This thing doesn't stand a chance. Got one more small add into weakness here. I kind of would have wished I was more patient for this bounce, but again, it was small, so it's not a big deal. Covering these dips here, and then this is where it gets really interesting. They had a kind of conference call going into midday here, and I knew it. I wasn't listening to it, but I was fully prepared to react to whatever price action told me. And it's kind of hard to see, but you see here, I can zoom in on stocks to trade here. You see this so before this, you see this little volume perk. Okay, this stock was close to its low days, and so when I have a conference call going on, I need to see action that's going to confirm with me whatever is being said in the conference call is going to make this stock go down. Okay, and the way it's going to do that is the price action is going to tell me. If I see a lot more selling pressure as the conference call is going on, that tells me people who are listening don't like what they're hearing, they're selling. Now you see this little green candle. I saw that, and it was a massive amount of volume. Actually, let me pull this over here like this. You see that there? Yeah. So this green candle was one of the biggest green candles it's had pretty much since the morning. And that was the exact opposite I wanted to see, right? I wanted to see that amount of pressure, but on the selling side. So when I saw it on the buying, I said, it made me very uneasy. I thought, this is not what I want to see. Clearly, something is being said on the conference call that I don't like, or that I don't want to hear as a short seller. And so I said, you know what? I'm already up over $1,000. I'm up over 10 to 15% in this trade. Let me just cover. And that's why you see I covered right here. And as you can see, 3 minutes later, they announced that they are pretty much, I guess, deferring. I don't remember the exact word they used, but they're stopping their dilution essentially. Essentially, the dilutive qualities that they had are no longer in effect as of this moment, because the shareholders voted on it, and it just ramped, right? Just massive squeeze. It did come back down. It didn't reshort anything, but I'm just very happy that I played it safe and that I was listening to the action that it was telling me beforehand of this massive, because I would have hated getting squeezed and having to cover up in the 140s, 50s, or your worst 170s if I really got stubborn and pretty much let my 1K profit go to a loss. So I'm just very happy and lucky that I listened to the price action, covered, avoided the squeeze. Of course, in hindsight, reshorting this bounce would have looked really good. But after this action, I was like, I'm not touching this again. That's that. Next one. So week 3. So we've covered pretty much all the best trades for week 1 and week 2. Week 3, there were only, I guess, these 3 days were the most eventful, and that was ACB. ACB is a former weed runner when the weed stocks get hot, and this thing is unique because it was a former reverse split. So you can see here, prior reverse split was 70 cents, or 50 cents, sorry. And they did I don't know what number, 1 for 10, 1 for 15, whatever they did, opens back up at $8. You can do the math of whatever reverse split that is. So, if you've bought or listened to Roland Wolf talk about this on his reverse split plays, when a reverse split happens, it completely changes the share structure of the company, right? There are now less shares available, meaning that if there's any significant amount of demand and less supply, being the shares, this stock is going to have a much better chance of spiking. And prior to the reverse split, they were a very dilutive company. I believe they had almost over 1 billion shares outstanding. So you needed a massive amount of volume to get this stock going up. But once they did the reverse split, the float here says only 100 million, which completely changes things. And so after a few days of having the reverse split go through, all of a sudden, they have a couple PRs and the stock gets running, right? We now go from $6 up to $20 on the same company, right? The same sales. I think one of the PRs where they announced they had better sales, but regardless, right? This is still the same company that died from wherever it was to 50 cents in the weed run. A lot more has to change before this company becomes something very legitimate. And regardless, I'm still just looking at the technicals of this trade. And again, this stock has not gone red yet. The stock is held green every single day, like NMHLY, like BTIQ. And so again, this is what I look for. This is the idealness. This is the trade that I see, and I'm like, this could be above a 1K winner, right? If I take this trade seriously, I've got good trade plan, good risk management, good position sizing, this is going to turn out to be a great, great win. And so I believe I also have my trades here. Let's pull this out. So yeah, you see, I have a pre-market starter, and I believe I posted this chart on Twitter, and people ask me like, how do you determine if you start pre-market, this or that? And most times I don't like starting pre-market. If I do start pre-market, it's very small size. Now, why do I start pre-market? Again, I have resistance to play off of in the prior day. So this clearly topped out about 1970 into 20. 20 is going to be that key round number. In pre-market, it tried to break 20, failed. So at this point, this 1970 to $20 level is my risk. I believe my starter right here it was like 200 shares. So if this thing spikes over $1 on me, I'm looking to lose $200, a very small starter. And I'm just have that on to essentially if I put a starter on that's very small like that, it's typically because I want to remove my FOMO, right? I don't want this stock to just panic out the open and I completely miss it. So if taking a very small starter where a loss would be just not even noticeable, right? At this point, a $200 loss to me is very, very small. And that's going to remove my FOMO, then by all means, I do that. So that's why I took that small starter there. Out the open, we really extremely weak. I think let's look at the volume again. The volume is about the same, right? And so normally I would like to look for lower, but this is where you react. When the stock is headed to red, when the stock isn't going up, but it's still the same volume. And I think I've talked about this in one of these videos. I can't remember which ones, but if you see a stock with the same volume or more, but it's not going up, that means either A, dilution is going on. I can't prove that. I don't know if ACB was doing a dilutive deal here, but or B, that the sellers are taking over, right? There are more sellers than buyers. It's again, it's so many little indicators here and there that you have to notice. And so for here, the fact that the volume was about the same, but it was still going down and it was still very weak and going red for the first time, that didn't bother me. At this point, I knew now with the good risk level on 20, and typically now the good risk level on 1930 being this huge candle of buying and turned into just a complete stuff move. I feel pretty confident at this point. So see here, I start shorting more. These bounces, we then go red. I cover a little bit into this first pull. I get short again. This bounce did worry me a little bit, but again, it's still right in the day. It's still below all these key levels. It's still below VWAP. So I'm just staying patient. And we let this fade a little more, and then we panic even harder. I cover into this new low day panic for about $2,900. So just great win. I think something that was key to note about this trade is that it stayed under VWAP the entire day. And so that's what I mean when I say kind of getting all your indicators together. Even though the volume was big, it just showed no signs of serious strength, right? The entire day. It barely even tested VWAP at the open, and the rest of the day doesn't even get close. Kind of here, but normally if a stock's going to be strong, it's going to test VWAP, it's going to break over VWAP, it's going to start going green on the day, and once it went red, there was no fighting this stock. This was a very smooth and easy win, and so that's what made it so great and what it made me stay so patient and ultimately pulling out $2,900. So next play of the week was SPON. SPON, this again, another OTC, so a great OTC example. And this thing just really blew me away. I did not expect this move to happen at all. It did have a move like this here, so I guess I could have expected it, but at the same time, I just didn't. And so let me go through this. Again, 16 cents up to 60 cents. I'm looking for the backside. Always looking for the backside. And again, and this is another stock, hasn't gone red in the day, right? It's too hard in most cases to fight a stock that is still green. And like a perfect example was MVIS, right? That stock was clearly holding green well. I'm fighting it, I'm taking losses, and all I have to do is wait for when the first red action comes. It's just so much easier. So that's what happened. Right here, we go red for the first time. I get short. It panics a little bit, and I cover a little bit at 50 cents. But it doesn't panic as much as I really wanted to. And I think, let me look here. Yeah, SPON. So again, get short, cover a little bit. It holds red on the day, which is great. And it actually makes a new low day here, which is also great. But then the volume just dies. It gets very illiquid. And I have a cover order at 45, and the low was 45.2. And so I just missed my cover by, two hundredths of a penny. I'm missing my cover. And so I'm thinking, this is not ideal anymore. This volume is way too illiquid. I did not short to trade something that is this liquid. But again, that doesn't change the fact that I should still follow my plan, right? They need to stop me out by going green, by probably breaking the high of 65. So I just stay patient. I say, calm down, just follow the plan, trust your plan, and let this play out. For whatever reason, right, again, someone who was long had shares to dump, comes into the late day and just starts dumping. Bounces again, dumps even more, I cover, and then complete liquidation happens, and we go a whole another 10 to 15 cents lower. Now, with OTCs, it is pretty easy to time the level 2. The problem with this particular trade was, and I've talked about this on the This Week in Steady Trade podcast, The Twist with Matt Monaco and Jack Kellogg, it was particularly hard to read this on this stock because when it is so illiquid, level 2 turns and level 2 reading becomes very difficult because when you only see one print every 30 seconds is completely different from seeing 30 prints in a second, right? And so when this happens, it was still just illiquid enough to where I had to cover into weakness. I couldn't read the level 2 because, like I said, I said this on the Twist episode, I'm trying to cover the low 40s, and within 3 ticks later, it's now hitting 45. So the last thing I want to do is be greedy, not cover into weakness, and then think that I have to slap 45 to get out and pretty much give away 3, 4, even 5 cents of profit just because I have to, cover that spread because the spread is so liquid. Now, once I covered, then the volume started coming in. You now see how big the volume gets, and at this point, this is when the level 2 became very easy to read. But again, there was still someone who needed to sell. This bounce is very weak. A lot of people unfortunately lost money trying to buy this dip. I actually tried to buy the dip, but I actually missed getting filled. And so once I missed getting filled, I then saw how weak the tape was, and I said, okay, I'm not going to buy this. I don't want to buy this, and pretty much no bounce happened. So I did still lock in close to $3,000. I locked in 2,700 on this play. So great trade overall, but again, just that difficult middle ground between trying to read the level 2 and it being liquid, and all of a sudden it turns really liquid. I'm not going to beat myself up for that. It just happens. So, and then my worst day of the month was this day right here. Now, I didn't take any big loss of $1,500. I just took probably 5 or 6 paper cuts over and over and over again. That was on Fannie Mae here. Fannie Mae 150 to 250. Again, not. This is where I sometimes I have these days and these months where I feel like I have to make something happen versus just letting things happen. And this is one of those days where a lot wasn't very going much on, and I see this typical stock that I feel like I know because again, this is a liquid OTC. This is much easier to read the level 2 turns. So I'm thinking, oh, I can just stab here, short here, long here, and it was a complete disaster. I mean, I took like 4 or 5 trades in this thing, tried shorting here, covering, then tried longing, and then selling, and then tried buying this dip, and eventually I just gave up. I was embarrassed with myself. I was like, oh, what are you doing? Like you're just throwing money at this thing. Like you can just time every top and bottom, and in hindsight, it looks great. It looks very smooth, very easy, but in the moment, I just could not get a read to save my life. Everything looked like a fake out. And so after 3 or 4 or 5 trades of $300 to $200 losses, I'm down now, $1,500. So let's quit this here. But I'm down, $1,500 for the day. So that was very frustrating. But at the same time, I'm glad it was just a couple paper cuts. It wasn't like I'm losing $1,000 over 5 trades and losing $5,000 on the day. So very manageable day, but just frustrating that I let myself be so reckless and just taking so many paper cuts in a row. So into the last week, we now have INVB and INTEQ. INVBY is very similar to NMHLY, where they just the way they moved is so beautiful. I don't know how to describe it. Like the way these things moved in the OTs in the level 2 on these particular OTCs is just so such a gift if you know how to trade them. And so going into this day, this is the most insane thing I've ever seen. 40 to 10 one day, back down to 10. It started to run at $5. So when we are now on our third green day and we have this huge parabolic going into $20, again, I take smaller size on parabolics, but because this was such a massive win for me, it was because the range on this ticker was so insane. I believe I shorted only like 3,000 or not 3,000, sorry, 3 or 400 shares at 20, right into this top here. And when it pulls down to 16, I mean, 400 shares and $4 a share, like that was $1,600 right away, like right off the bat. I have my my trades here. Let's see, pull this out. Let's try to zoom this in. Right away, it's like short the top, cover into the weakness. $3 to $4 a share on $400, $300 or 300 shares. I was up close to $2,000 within a matter of 30 seconds. It was the most insane thing I've ever seen. I was like, holy crap! And it just made me realize this thing has range, right? And so very small size can take you a very long way on this ticker. And the best thing about it, like I said, is that the level 2 was so clean, and this thing loved whole dollars so well that I can't describe it to you in this chart because you're just seeing a picture. But in real time, when this thing hit 20, it wasn't breaking 20. There was the level 2 and the amount of selling that was going on when people were trying to buy through 20, like the ask unit hit and hit and hit and hit, and 20 just kept absorbing. At that point, it became a very clear risk level to use, especially when it goes from 12 to 20 in a matter of 10 minutes and already up from 5. It's just a great stock to read. And so ultimately, I was risking. I shorted 1990, risking 20, and this thing just pulls $4 a share. I mean, the risk reward on this trade is just massive. And again, I did the same thing. Short again this bounce in the top of $19, pulled to 16, another couple dollars a share there. I leave it alone most of the day, and then we start going again. Now, on my trades here, let's go over here, pull this up a little. You see, I took a very unfortunate earlier entry here. Now, why is that? I don't think you can see it. You really can't, unfortunately. But in the level 2, when it went from 20 to 30 now, 30 was this new level where there was a bunch of selling, just a bunch of selling. And so similar to where I did it in the morning, I had to trust it again in the afternoon. So I shorted 30. It ends up breaking 30. Now, when you have a parabolic like this, it's going to get very overdone very quickly. And so what I try to do, I try to immediately hit 31. Then I try to hit 32. All of a sudden, we're up to 33, 34, 35. Now, the good part is like you've heard Jack Kellogg say this, when you have a cushion in the morning, you can kind of start to be flexible. Now, this is no justification for me not cutting it. I absolutely should have cut it if I got filled, and I tried to. But the great part was, like I said, this is a small size on a stock that can give you a bunch of range. So by the time it was up to 40, I wasn't with the cushion for the morning. At worst case, if it broke 40, I had to cut it. No questions asked. Absolutely had to get out, and I would have lost maybe $800-900 on the day. So I would have given back my profit and a little bit more, which is again fine. No, in no way was I in this detrimental, heartbreaking trade, because again, small size on the stocks that have such big range like this is the way to go. And so again, when it goes to 30 to 40, I told myself, okay, massive selling at 40. If it breaks 40, I have to cut. I don't care if I cover. I have to chase to 45. This thing could go to 60, right? You have to get out at some point. And again, so this is why I see this massive selling in at 40. I said, okay, let me take one more small 100 share position, and I'm going to cut it ASAP, no matter what, if it breaks 40. But again, like I said, the volume and the level 2 was so clear and so easy to read that it just pulled so hard, and it went from 40 to 25. And again, there were huge bids at 40 to 25. A bunch of people were buying there, so I just put my best covers at like 45 or 25.05, got filled immediately, and I was just mind blown that the range on this stock could continue to go even wider than it was in the morning. And so, riskier situation, right? Not the situation I ideally like to be in, but at the same time, I managed to trade in the best possible way, and ultimately, sticking to that level at 40 once it held there, it had to be the end all be all, right? And so then we see on the trades here, this is a huge bounce. And I post on Twitter, I unfortunately don't have the tweet up, but I compared this to what Tilray did. Tilray was a stock that parabolic at 300 and then dropped all the way back down to 150 in the same day. And it had this very similar move where after it died, it had this bounce. And if you were able to short into this bounce and then risk these bounce levels, you were in a great position to catch this panic. And so that's what I did. I shorted into these bounces right here, and then we panic. And actually, I was listening to Michael Good. Michael Good killed this stock, making like over 20 grand. So congrats to him. He was telling us in the webinar he had about how people at Robinhood were trading the stock like crazy. It was one of the most traded tickers on Robinhood this particular day. And for whatever reason, Robinhood stopped trading like right around here. They said whoever owns this stock or whoever wants to buy the stock can no longer buy it. We are stopping the trading of this ticker. So that immediately pretty much takes away almost all buying from this ticker, right? Any strength, any buyers that were Robinhooders were using on the stock is now gone, right? So that's a huge imbalance of supply and demand. So what happens next? All the selling comes in because all the people at Robinhood were buying, they aren't there anymore. They no longer exist in the game. They're not in this stock. So it just dumps, right? And so I did have a little early cover here, but I I shorted 300 shares. I covered only 100 shares to downsize. I still had 200 shares left. We pulled $10 a share to 20. I cover for another $2,000. And then, of course, it proceeds to go from 20 down to 10 into the close. Just insane. Just absolutely wild. Ended up closing the day over at $8,000 on this ticker. One of my best trades to date. Again, very, very little in a tight position there, but managed that well, and just insane. If this was a NASDAQ, this probably wouldn't have played out like this. I probably couldn't have read it nearly as well as I could on OTC. But again, with such great level 2 reading and having it being able to top out at such key levels like 20, 30, 40, 25 on this low here, it was just all around just amazing play. Then last best trade, just a little cherry on top is INTEQ. So this is a bankrupt company. It used to be under the ticker of I, just I by itself. And when you run from 20 cents to 50 cents in a day, and you're a bankrupt company, again, when we go red, I have to trust my gut. I have to follow the indicators, and so that's what happened. Shorted right out the gate. We get a huge panic, similar to NMHLY, where we go from 52 down to 36. At that point, I'm not being greedy, and there's no way I'm not going to cover that. Covered it all for about $1,500. I believe that was on this day, second to last day of the month, and so that's pretty much that. Don't have any other great trades, but hopefully, I did go over a lot of my biggest winners, like I said in the beginning of the video, because I want to show you guys what are the indicators I look for that really are able to tell me this could be a big win. And some of those indicators I can just briefly recap. It's like if the stock's never gone around the day before and it's having its red action for the first time, and the stock's spiked over 200-300% over 2, 3, 4 days, I have to trust that. I have to take that trade. Now, do they all work? No, of course not. Perfect example was GNUS. When I took that, it was gapping down and it squeezed right away, and I took $800 loss. That's going to happen. But seeing all those indicators align and seeing how if the volume's weaker or the volume's just as big, but it's selling off all this resistance overhead, all those things coming together and like building the case for why this stock would go down, and then seeing it go red on the day, just I've seen this so many times, like hundreds of times over the years, that eventually I can't help but not take aggressive size and pull out larger profits. And so ultimately you do that 13 times like I've done this month, you come out to $32,000. So that's pretty much it, guys. I hope you enjoyed this recap. We will see how the market goes into June. Typically summer gets slower, but unfortunately with what's everything going on in the economy now, the pandemic, all these unfortunate riots and standing up for what's right, this could get crazy. This market might not stay slow at all, or might not go slow. It might just keep trucking through, being busy as hell. So we'll see. Thanks so much for watching, guys. I'll see you guys next time.